U.S. stocks close a choppy session higher after the stronger than expected January retail sales report suggests the Fed will need to keep rates higher for some time. The British FTSE breaches 8,000 for the first time after inflation in the UK dips for the third straight month. Stocks in the Asia-Pacific opened higher after Japan reports a record trade deficit of 3.5 trillion yen. The SGX Nifty also indicates a positive start for the Indian market. And India's January goods plus services trade deficit dips to a record low of $1.27 billion. Goods trade deficit also falls to a 12-month low of $17.76 billion as imports fall sharply. MSCI defers changes announced to the weightage of Adani Total Gas and Adani Transmission to its May review, citing potential replicability issues due to the impact of price limit mechanisms. Voting begins for Tripura Assembly polls. 259 candidates in the fray for 60 seats in a multi-cornered contest between the Bharatiya Janata Party, the Congress and the Tipra Motha Party. Votes will be counted on the 2nd of March. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top stories that we have for you as we get into this fresh trading session. There's lots for us to talk about, but first up, let's take a look at what's going on across the global markets. For Asia, we're definitely getting a very positive start. So all of those markets are in the green. What's doing the best is the Korean Kospi market. That one is up 1.7%. In fact, for this entire year, it has been rallying quite well. Already for the year, the Kospi index is up around 11%. Some of the others also up on your screen. Hang Seng is doing well with a 200-point gain right now, so almost 1% higher there. Taiwanese market 0.6% in the green. And across the board, whether you look at Nikkei, you have Straits, Taiwan, all of these seeing gains of between 0.6% to 0.7%. Shanghai is also in the green, but just a minor green tick there, so quite flat for the Chinese markets. But other than that, it's all off to a very good start. The SGX Nifty will also come up for you, and it is indicating that at least the start for us should be in the green. We're 43 points higher right now, but let's see how the rest of the trading session pans out. It's also the weekly options expiry, so we will see how this session moves. But sticking with the global markets, let's also bring you what happened in the US then. Wall Street ended Wednesday's trading session marginally higher, so the Dow Jones was up around 40 points, the S&P gained around 11 points at the close, and the Nasdaq Composite was the big outperformer. It saw a gain of 100 points. CNBC's Kate Rooney is here with a wrap of all of that action from Wall Street.
Markets closed up today as investors continued to weigh the latest economic data. Despite yesterday's hotter-than-expected inflation number, retail sales data released today showed that consumers are still spending. Retail sales jumped 3% in January, outpacing estimates. The Dow closed up 0.1%, the S&P ended up over 0.25%, and the Nasdaq finished with a gain of just under 1%. The House Judiciary Committee today issued subpoenas to CEOs of major tech companies. The committee, headed by Republican Jim Jordan, called on the leaders of Apple, Google parent Alphabet, Amazon, Meta, and Microsoft to produce documents as part of an investigation. Jordan has alleged, without evidence, that big tech has colluded with the federal government to suppress speech. And the production pause of Ford's electric truck will continue at least through the end of next week. The automaker says it believes it has identified the battery issue that halted production of the F-150 Lightning truck at a plant in Michigan. Ford said they don't think any of the trucks already on the road are affected by this issue. That's what's happening here in the U.S. Back to you in Mumbai.
Okay, thanks a lot for wrapping up all of that action from the U.S. markets. But staying with that, let's also listen in to Alan Blinder, former Federal Reserve Chairman, as he speaks on the market as well as the Fed. Listen in.
I was extremely disappointed in the change in the seasonals. I had been talking about and writing about the very sharp decline in inflation during the year 2022. There still is a decline, but with the revisions in the seasonals, which rarely happens, that decline is not as dramatic as it was. And then you had jobs very strong, of course, and retail sales. So yeah, there is reason to rethink, I think, and I am rethinking the notion that we were on a very nice glide path to a soft landing. It's less clear today than it was 2 weeks ago. I think the Fed has felt the need to show its teeth, to growl and snarl a bit, to try to get the markets in line, because they were getting way ahead of themselves, as they always do. I mean, this is not new. Markets are much more mercurial than the Fed is. Maybe now that the markets are sort of coming in line with the Fed's projections, there'll be less of that snarling and growling. We'll see. The Fed is tightening, and the long end of the yield curve, or the medium end, whatever, depends which kind of inversion you're looking at, hasn't responded as much as the short end. That's very normal for, that in general is very normal for a Fed tightening, and if there's enough of it, you get an inversion.
All right, rethinking the notion of the path to a soft landing, that is the word coming in. But let's now also bring you the final update on our global market wrap this morning. European markets ended Wednesday's trading session higher. So the French CAC was up over 1%. The DAX, the German market, gained around 125 points at the close. However, it was really the British FTSE index which hit yet another record high in yesterday's trading session. So it breached the 8,000 point threshold for the first time and ended the session about 44 points higher. So this is, of course, on the back of inflation in the UK, which has dropped for the third straight month to hit 10.1% below expectations. Of course, it's still very high, but it has come down significantly, and it is well below what was expected. However, like I pointed out, high food and energy prices, of course, continue to put pressure on British households. So that's some important, important data coming out of the UK that we are tracking. But with that, let's also move on and tell you about all of the cues that you should track as we get into this fresh trading session. Our research team is here with the trade setup and all of the individual names that you should watch today. We have Rima, Nigel and Vivek here with the trade setup. Guys, a very good morning to all of you. And Rima, let me come across to you first. The handover is positive. Looks like we'll get a good start. But, it is the weekly expiry as well. So it'll be interesting to see which way things go.
Absolutely. We've got two good days on the trot. And yesterday, the Nifty in the late surge managed to conquer that 18,000 mark and close above it. The next big level to track will be those 18,200 to 18,250. That was the previous swing high on the Nifty. We hit it sometime in the early January. But as you said, it's the weekly options expiry today. The SGX Nifty is suggesting a positive start. Let's see whether we can climb. Nestle results will be Nestle will be reporting numbers today, so that's going to be on your radar. The FIs have bought in the cash market for the fourth consecutive day. Yesterday, they bought 432 crore in the cash market. But remember, the FI inflows have dwindled. So, on 10th of February, that's on Friday, that's last Friday, the FIs had pumped in nearly 1450 crore. Then on Monday, that number came down to about 1322 crore. On Tuesday, it was down to 1300 crore. And on Wednesday, it was down to 432 crore. But the fact that the FIs have been continuously buying for 4 days is a positive. The DIIs too bought yesterday, and they bought about 516 crores. In fact, for the last 3 trading sessions that this week, we've had both FIs and the DIIs buying in the cash market together. So the net institution number has been positive. US market handover was positive. The lead there was taken by NASDAQ as it rallied close to about 1%. The US retail sales have come in stronger than what the street was anticipating, suggesting that the US economy is still in fine fettle. Today, the focus will be on the weekly jobless claims data, the January housing starts. These are the 2 economic reports we'll watch from the United States. But for our own markets, the question is whether the momentum will continue and we take out the previous swing high of 18,200 to 18,250. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues for the market. We are going to track all of this very closely, but let's also talk about the individual names that you should have on your radar today. Vivek is here with that entire list. And Vivek, once more, Adani Group stocks likely to be in focus today.
Well, absolutely right. And, for a change, expect some green across the screen, amongst all of these names. So what's actually happened is that MSCI today morning has given an announcement saying that they've gone ahead and deferred the implementation of certain weight reductions that were to happen across the Adani Group stocks in this particular index review, or the Feb index review. So Adani Total as well as Adani Transmission, they will see the deferment of the implementation of the weight reduction in this particular review. Also keep on your radar Interglobe Aviation. Sources tell us that Shobha Gangwal, erstwhile promoter entity, is likely to sell almost 4% stake in the company. This is going to be done via the block deal. We understand that the floor price for this particular offer is at 1,875 rupees a share, and the offer size of the particular deal is almost close to 2,930 crore rupees. post this particular block deal, there is a lockup period of almost 150 days for further sale of shares. And just to give some context, in February 2022, Rakesh Gangwal had said that he is going to be stepping down from the board and intends to pare his take down from the company over a 5-year period. So at the end of the December quarter, they held almost 33.78% stake. So, this is now going to drop down to a little over 29%. Keep an eye out on Adani Power as well. The company has now decided not to proceed with the acquisition of DB Power, and the long stop date for this particular acquisition has now expired. Lastly, Patel Engineering, the company has emerged as the lowest bidder for projects worth almost a little over 1,560 crore in both MP as well as Maharashtra.
All right, Vivek, thanks a lot for that entire list of stocks. And like Rima was pointing out, Nestle will also be posting its results today, so that will be important to watch. Yesterday, of course, the stock, did quite well. It was up around 1%. But with that, let's also move on and talk about all of the cues from the futures and options space. And Nigel is here with exactly that. Hi, Nigel.
Well, morning, Pavitra. Now, just listening into what you all had to say, and the SGX Nifty, well, that's indicating a bit of a gap up. But the other global cues, the dollar index is moving towards around 104. The Brent crude prices as well, holding above $85 per barrel. And the US bond yields moved to around 3.8%. Put all this together, I think this morning taking some money off the table on the gap up will not be such a bad idea. From the domestic perspective and from the F&O perspective, the PCR we were pointing a couple of days back that it is at around 0.8 odd. Now it's moved to the higher end of the band. When it cools off to around 0.7, 0.8 odd, that's one of the indications to buy the index. Now, in fact, it's moving to the upper end, so maybe taking some money off the table may not be such a bad idea. What are the FIs doing in the F&O market? Well, they added close on 2,000 short contracts order. Now the short positioning is at around 74%. On the option side, well, they bought more puts than calls. So yesterday, in fact, they bought close to around 3 puts for every 1 call that they bought. So protection on the downside continues. While on the writing side, well, they wrote more puts than calls as well. They wrote close to around 2 puts for every 1 call that's written, telling you that maybe the base of the index from around that 17,350, it moved to around 17,550. Now, it appears that 17,750 odd could be the level. Because just look at the options data. 18,100 call, 18,050 call. Well, there was some bit of writing out there. Today's weekly expiry, so you'll have to eye that 18,050 odd mark, because the writers of that particular strike, they are counting on the 18,080, 18,090 odd level holding out. On the downside, though, we're seeing a fair bit of action. 18,000 put was very active. 17,950 put saw a fair bit of writing. So take you into the levels right away then. The near-term support should be around 17,750. The 50 DMA, that'll be a bit of a congestion zone. We're going to be opening up closer to that. So that's why I think that maybe taking some money off the table could be prudent. While on the Nifty bank, the 50 DMA is some distance away. But on the downside, 41,200 odd has been a bit of a support. So keep an eye on that mark. Back to you.
All right, we will keep an eye out for that. Nigel, Rima, Vivek, thank you very much for joining us and prepping us up for this trading session. We are going to get into a short break now, but when we return, like we told you, the MSCI has deferred changes announced to the weightage of Adani Total Gas and Adani Transmission to its May review. More on that when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and some important data. India's trade deficit fell sharply below $18 billion. This is for the month of January, and the fall is largely due to the rise in imports, which are now at their lowest level that we've seen in 16 months. So that has come down quite significantly. Lata joins us to decode all of the numbers.
Yes, that's right. It's a very important trade deficit number. The January deficit coming in at 17.76 billion, a good 25% less than what it was in the previous month, December, when it was about $23.5 billion. It is equal to what it was a year ago, the deficit. But the important part, why the deficit in January is so much lower than December, is not because exports have grown, but because imports have fallen rather sharply. In fact, exports are also lower. They are at 32 billion compared to 34 billion in December and 35 billion in the previous January, year ago January. So exports are actually down, but imports are down very sharply at $50 billion in January compared to $58.5 billion in the month of December. And of course, a year ago it was 52. So imports are sizably lower, about 16% lower than what they were in December. And the Jan imports at 50 billion is actually lowest since August of 2021. So as you say, a 16-month low. The key imports that have fallen are actually gold and precious stones as well as a big fall in electronics. Among others, chemicals and metals have also fallen a bit. Key exports that have fallen are basically textiles, engineering goods, gems and jewelry. Indication is that this is a global slowdown, and that's why all kinds of items are impacted. However, just to come back to the fall in the trade deficit, at $17.6 billion, the Jan trade deficit is lower than the average of the last 9 months. April to December, the average deficit is $25.5 billion. So substantially lower than that, almost 20%. And likewise, the Jan imports at 50 billion is much lower than the average import of April to December, which is $60.6 billion. So the basic point is, because of the imports falling so sharply, the big concern over current account deficit and concerns over rupee depreciation will be much less now after the Jan import number.
All right, Lata, thanks a lot for rounding up all of those numbers for us. But staying with this, government sources have also told CNBC-TV18 that the trade surplus for services is at its highest level that we've seen, with exports in the sector growing at 30% as of now. Now, sources are also telling us that all ministries have been told to identify imports of non-essential goods. Finance Minister Nirmala Sitharaman also continues to meet with industry leaders after the budget. So today, she was at the industry body's PhD Chamber of Commerce and Asokham. This was yesterday. Finance Minister Nirmala Sitharaman said, she was actually quite non-committal when asked about further reduction in export duties. She also added that the government is keeping a close watch on imports, and even a 3-month rise in imports can hurt India for the full year. So let's listen into that.
The way in which I have spent this year's preparation and also the last year's preparation for the budget has been to go item-wise on customs duty. That is why we were able to bring it down in about 18-20 categories, and we very clearly said we will keep that momentum and we'll follow that process of where it is possible to reduce without hurting an Indian industry which needs it. We will bring it down. At the same time, keep very close watch on flooding or surge in any kind of imported goods. The surge sometimes hurt us. Even if the surge was only for 3 months, it can hurt us for a whole year.
All right, keeping a very, very close watch on what's happening with the import picture, and saying that even a 3-month surge can, really impact what goes around for the entire year. But with that, let's move on to the other important story. The MSCI has deferred changes announced to the weightage of Adani Total Gas as well as transmission to its May review, citing potential replicability issues. So Vivek is here with all of the details on this one. Vivek?
Well, good morning. Some important details coming in from the MSCI announcement this morning. So earlier, what the MSCI had indicated was that, there will be weight reduction across 4 of the Adani Group stocks. However, now they've made changes as to the actual implementation in the Feb review. And as you mentioned, in Adani Total Gas as well as Adani Transmission, MSCI has deferred the implementation of the weight reduction to the May review. So it will not happen in this particular month. So, expect some relief rally coming in both of these names in today's trading session. What do they mean by potential replicability issues? The simple fact is that, both of these stocks have continuously been hitting lower circuits. So the funds that are actually tracking this particular index changes would be unable to implement these changes, in this particular review, and which is the reason why you've actually seen the deferment of this particular change. A recent example is in the case of Piramal Pharma, where, there was a similar issue being faced on the stock continuously hitting lower circuits. Now, the other important development is, what they've said is that they will now, take into account a special treatment of all of the Adani Group stocks from this particular, index review onwards. And the main reason is that, potential replicability issues and also ongoing uncertainty with relation to key input data. So some relief coming in for Adani Enterprises and ACC as well. Important to note that all of the Adani Group stocks, barring, recent listing Adani Wilmar and NDTV, are part of the MSCI standard indices.
All right, Vivek, thanks a lot for getting us all of the details there. So the Adani group of stocks will be in focus once again based on this change that the MSCI has announced. But there's some more data that is flashing at the bottom of your screen. So let me just run you through that. The government has announced the latest revision to the windfall gains tax. So on crude petroleum, it has been cut to 4,350 rupees. This is versus the 5,050 rupees that we had earlier. The special additional excise duty on ATF has also seen a big cut. So that is down to now 1 rupee. This is is versus the 6 rupees per litre that we had earlier. And the special additional excise duty on diesel is cut to 3 rupees, and this is versus the 7.5 rupees that we had per litre earlier. On petrol, of course, there is still zero additional excise duty. So that is something important that we had to bring you up to speed on. But with that, we are going to get into a short break. On the other side, like we told you, polls are underway in Tripura. So we'll bring you all of the details when we come back. Welcome back. You're still tuned into Power Breakfast here on CNBC-TV18. And like we told you, polls are underway in the northeastern state of Tripura. So 259 candidates are in the fray for the 60-member assembly. The BJP is pulling out all stops to retain power in what is now a multi-cornered contest this time between the BJP-IPFT alliance, the Congress-CPIM alliance, as well as the Tripura Motha. More than 28 lakh eligible voters are likely to cast their votes at over 3,000 polling stations. Remember, voting began today at 7 and will conclude at 4 p.m. today, and over 25,000 security personnel of central forces have also been deployed to ensure safety during the polls. Like we told you earlier as well, the votes will be counted on the 2nd of March. Okay, so that is the latest on the Tripura voting. But with that, we have to wind down on this edition of Power Breakfast. We leave you with the news that the Asian markets are all, higher right now, led by the Korean Kospi and Hang Seng markets. The SGX Nifty up around 53 points, indicating a good start for us in just a bit. So that is all on Power Breakfast. Thanks for tuning in. Bazaar Morning Call up in 2.
My journey of insurance